Hello everyone and welcome back to TradeSmart. Let me start off by saying a huge thank you to each and every one of you for supporting us on this incredible journey. Our YouTube channel just turned 2 years old and we couldn't have reached this milestone without your continuous support. So thank you. To show our appreciation, we prepared something special for you. First of all, I will be sharing the results of all of our Premium TradingView Script Optimizations over the past 7 months. But that's not all. We have some fantastic surprises and gifts lined up for all of you, which you don't want to miss, so make sure to stick around till the end. Also, I wanted to mention that we are actively releasing short-form content on multiple platforms such as Instagram, Twitter, TikTok, YouTube Shorts, and Facebook. You can find the links to these down in the description. With that said, let's get right into it. Let's kick off with the biggest surprise. For the next 2 weeks, we are giving you a 7-day free trial access to all of our premium scripts and optimizations, along with our exclusive Smart Trader tier Discord server. This is your chance to experience the full power of our advanced trading strategies firsthand without paying anything. All you have to do is simply head over to our Patreon page, navigate to the Smart Trader tier section, and click on the 7-day free trial button. But remember, this offer is only valid until the 13th of June, so be quick and don't miss out. After you have signed up, you can use all of our tools for free for 7 days without any charge. While you are at it, we would love to hear your feedback on our premium scripts and optimizations. Let us know in the comments section under this video if there are any changes or additions you would suggest. Your input on this topic is more valuable than ever, as in September we will start coding the TradeSmart version 2.0 premium scripts. These scripts will be filled with many new tools, trade management options, and filters. Also make sure to watch the whole video, as we have another free surprise for you that will make your strategy backtesting process 100 times easier. And now, let me briefly explain our optimizations and show you how these optimizations performed in the last 7 months. As you may know, for the past 2 years we have been backtesting and optimizing objective rules-based strategies and coded the best performing ones into trading algorithms, also known as our Premium TradingView scripts. You might also have experienced that each asset and time frame behaves somewhat differently, and as a result, a strategy that works on Bitcoin versus the US dollar might not work on the Euro versus US dollar pair. To solve this problem, we are continuously optimizing our scripts to find the best set of parameters for different assets and time frames. Over the past 2 years, we released 36 different optimizations for these scripts, and we've been closely monitoring their performance in live market conditions. At the last day of each month, I go through the script optimizations one by one and collect their backtesting results for that specific month. As an example, let me show you the optimizations performance spreadsheet for one of our best months, January. I know this section might be a bit dry, but it's essential to understand the basic statistics and backtest data if you want to become a successful algo trader. So bear with me, I will try to explain it as quickly and clearly as possible. At first look, this spreadsheet might seem a bit complicated, but trust me, it really isn't. Let me walk you through the columns one by one. First of all, we have the phase column. Here you can see if the optimization was marked as a test or robust. If it says test, it means I wouldn't have traded that optimization. However, if it says robust, it indicates that at the end of the previous month, specifically at the end of December, I would have chosen that optimization as a robust and potentially profitable option for the following month. Now, it's important to note that this is not financial advice and I am not a financial advisor. I am constantly learning and adapting my approach based on previous results. By choosing robust optimizations, I have 2 goals: decreasing the monthly losses and increasing the monthly total profit. Moving on, we have the ID column. Each row corresponds to a specific optimization. As I said earlier, in total we released 36 different optimizations, but in this spreadsheet you can only see 28 optimization IDs. And that's because the remaining 8 optimizations were released after the beginning of January. Next, we can see which asset and time frame the strategy was optimized for, followed by the date of optimization release. This column provides information about the time interval that the results cover and the strategy's fee rate. For crypto optimizations, most of them have a fee rate of 0.05%, except for 2. The 004 and 0020. The reason for that is that until a few months ago, Binance offered a 0% trading fee program for BTC and ETH pairs. But unfortunately, they discontinued this program. On the other hand, none of the forex pairs include fees because our focus is primarily on cryptocurrencies. If you are a forex trader, I would love to hear about the fee rates you encounter while trading currency pairs such as the Euro-USD. Now let's delve into the performance metrics. In this spreadsheet, you can see the profit percentage, number of trades, win rate, profit factor, and the maximum drawdown for each optimization during the month of January. To make it easier to understand, I've applied some color coding. When it comes to the profit factor, yellow represents the best results, which indicates values above 1.5. Following that, we have green, gray, and red in descending order. Similarly, for the maximum drawdown, yellow represents a value below 3%, followed by green with 6% and below, gray below 10%, and red above 10%. Let's move on to the next section, which highlights the profitability of each optimization in the previous month. Here you can see the optimizations that were break-even or profitable in specific months. For example, in October, optimizations from the 2nd to the 7th, as well as the 11th, were profitable. If the boxes are colored black, it means that a particular optimization was not yet released at the start of that month. Moving on, below this section, we have the net profit summary. In the top row, the spreadsheet calculates the estimated profit we would have made if we had traded all the optimizations in January. And below that, we have the total profit for the robust or chosen optimizations only. And finally, we reach the less significant section, which is crucial for selecting the best performing script optimizations. In this section, I update the number of months in which a given optimization was profitable, the total number of months I monitored, and the trust factor. The trust factor is a percentage value that represents the proportion of winning month for a specific optimizations out of all the months it was monitored. For example, if the optimization with the ID of 002 was profitable in 80% of the month, for me it indicates a high potential for profitability in the future. And now you will be able to read and analyze all of these performance result spreadsheets. In the video description, you can find the links to all the 7 months of result spreadsheet. If you are enjoying this video so far and haven't subscribed yet, consider showing us some love by subscribing and giving a thumbs up to this video. Thank you. Before we reveal the estimated net profit summary for the past 7 months, let me share another surprise that will assist you in your backtesting process. We recently launched a simple website where you can learn more about us and find useful tools. One of the tools available is the Backtest Tracker. If you hover your mouse over the Tools section, you will find the Backtest Tracker. At the top, you can learn how to use it, but let me provide you a quick example. Let's say you want to backtest a strategy 20 times. You can adjust the trade count to 20 and click the Generate Trades button. Next, enter your starting balance, the percentage of capital you risk per trade, and the risk-reward ratio. In this case, I will set it to a 1:3. Below that, you can set the trading fee percentage. For now, I will leave it at 0%. Finally, specify the time taken to complete the trades in hours. You can also choose between compounding or regular calculation methods by ticking this box. Before clicking on the Calculate Results button, don't forget to scroll down and indicate whether each trade was a winner or loser. For example, if the first trade was a winner, leave this box ticked. If the second trade was a loser, untick the second box, and so on. Once you are all set, scroll up and click on the Calculate Results button. The backtesting results will be automatically calculated and displayed here. You will see a simple equity curve on the left and the statistics of the backtest on the right. This tool is incredibly useful if you do a lot of manual backtesting. Be sure to check it out. You can find a link to our website in the video description. And now, let's check out the performance summary of all of our optimizations over the past 7 months. In this section, I have compiled the total estimated net profit for all optimizations from October to April. Below that, you will find the results specifically for the robust or chosen optimizations. At the end, there are the total net profits for each row. And finally, the number of months where trading all optimizations generated more estimated net profit compared to trading only the chosen or robust optimizations. Under the first 2 rows, you will see the estimated net profits for each month categorized by different assets such as crypto, forex, gold, and the S&P 500. But I want to mention that the most important section here is the crypto-related one. Here I have collected the results for crypto optimizations that include trading fees, making these results the closest as possible to reality. To make the spreadsheet easier to understand, I've created equity curves for the total estimated net profit at the end of each month. Let's check what they tell us. In the first row of equity curves, you can see the estimated net profits at the end of each month if we would have traded all the optimizations or only the robust ones. For example, trading all optimizations until the end of November would have generated an estimated net profit of 75%. However, the following month resulted in an overall loss of 13%, which caused a decrease in total profits. While trading all optimizations would have been profitable, there were some significant losing months like this one. On the second chart, you will find the estimated net profit equity curve for only the chosen or robust optimizations. As I mentioned earlier, my goal with choosing robust optimizations for the upcoming month is to outperform the simple trade all method, which is displayed on the first equity curve. I aim for a higher overall net profit and lower maximum drawdowns. While I didn't achieve a higher net profit with the robust optimizations, I succeeded in keeping the maximum drawdown lower. And the result is a more stable equity curve, which is always preferable. Finally, the third equity curve of each row compares the previous two charts. The trade all optimization method is represented in blue, while the trade only the robust or chosen optimizations method is shown in green. It is evident that the robust method generated less profit, but provided a greater stability throughout the 7 months. Moving on the second row of equity curves, we come closer to what can be achieved in reality, as these three charts contain the results for only those crypto optimizations that have trading fees included. The first equity curve represents the trade all optimizations method in this category. It shows a total estimated net profit of 118% after the 7 months. But if you take a closer look, at one point the drawdown exceeds 60%. Imagine experiencing a 60% loss in just 1 month. I wouldn't be comfortable with that. And that brings us to the robust optimizations equity curve. Similar to before, the robust equity curve has a lower estimated net profit, but also a reduced maximum drawdown. In my opinion, it is a safer and more stable method, and I would choose it anytime over the trade all optimizations method. Now, without going into deep details of the final asset categories, as those are not our preferred ones, let's do a quick walkthrough. In case of Forex, the robust method resulted in a profit, while the trade all method experienced an overall loss. For the gold and natural gas optimizations, both methods resulted in an overall loss, but the robust method had significantly lower losses. Finally, with the S&P 500 optimizations, the robust method was slightly profitable, while the trade all method suffered a loss of around 10%. As you can see, there is definitely room for improvement outside of crypto strategies, and we will be focusing on that in the future. All the links to this summary and the previously discussed monthly optimization performance spreadsheets are listed in the video description. If you are still here, congratulations on your dedication. I hope you learned something new today and you will implement such metrics into your own trading. Don't forget to check out our Patreon for a 7-day free trial access to all of our premium scripts, optimizations, and to the Discord server. And that wraps up today's video. As always, thank you all for watching, and if you are interested in seeing some of the optimizations that were made using our premium scripts, check out this playlist. We thank you again for your continuous support. There are many amazing tools, strategies, and new methods on the way for this year, so stay tuned. If you have any questions or suggestions, feel free to leave them in the comment section below. Have an amazing day and see you in the next video.